All right, welcome back to Market Day Report. This is the last time we're going to see each other today, right? So in about 15 minutes and 30 seconds, actually. Cow guy closed at 1 Central, 2 Eastern. Boy, we got lots to go over again today. We had a big CPI number out this morning, see what the markets have done with that in hand and what the interest rates are doing, what everything else is up to. So again, 1 Central, 2 Eastern. The cow guy closed 15 minutes and 15 seconds now before we get there. Why don't we take a look at the corn? What's happening in corn? Well, it's up a quarter cent in March, and there you go. 6.54 and a quarter is last. May's up a quarter cent as well to 6.54 and a quarter. So there you go. Steady, basically unchanged, a little bit better. It's come off its highs, obviously. We've just watched 2 or 3 cents a road here over the last hour and a half. How about soybeans? They were up 20 cents in the Jan earlier. Now only 19. 14.79 and a half is last in Jan. March is up 18 and a half to 14.84. Okay. What about Chicago wheat? What's happening over there? Looks like the corn board used to look, right? 2 1/4 cents higher in the March, 7.57 even. His last May's up 2 1/4 cents to 7.66 and a quarter. We move over to see what the hard red wheat's doing in Kansas City. That's up 8 cents in that March contract. 8.70 and a quarter is last. May's up 7 3/4 cents to 8.62 and a quarter. Spring wheat in Minneapolis. Well, that March is up 9 3/4 cents there to 9.26 even. May's up 7 1/2. To 9.20 3/4. All right. And then finally the cotton. Cotton is going to be 228 points higher in that March contract there at 81.67, which is in the middle of the day's range, but it's good to see cotton on the upside. These prices brought to us by Bar Chart, and the content will be brought to us by Mr. Ted Seifried from Zaner Ag Hedge in Chicago. Thanks for being on here, Ted. All right. We're kind of giving or slip sliding away right now, as I would say. What are your thoughts after the round trip we've had today?
Yeah, it's mostly the corn. And that corn is the one that's the most concerning because, after the impressive day that we had yesterday, which is all based on, Ukrainian ports being out of power, we are having a really hard time following up with it today. And as you said, corn is just barely holding on to unchanged at this point. That's a problem from a fundamental perspective because we weren't able to follow through on yesterday's gains, but it's a bigger problem from a technical perspective because with today's high, we ran into the downward trending channel that we've been in since the last couple of days of October, and the sort of first real breakout to the downside of the corn range that we had been trading sideways for so long. So this is not a good sign. And unless we find some very last minute strength here on the close, this isn't going to be looking good on a chart, especially if we're able to close negative on the day. You can kind of say the same thing for wheat, although wheat's actually trying to hold it together maybe a little bit better than corn is. Even though well off its highs there, it's just, a couple more cents above unchanged, acting like it might actually want to close green. That might be a small victory for the wheat. And then for the soybeans, it's a completely different story. Soybeans, even though they're off their highs, they're holding on to a fair amount of strength. And that's really coming from the risk on day that we're seeing. You mentioned the CPI numbers a moment ago. Not as much inflation, or it seems to be cooling off. So people are feeling better about that. You see the stock market finding strength. Crude oil has found a very significant amount of strength. And that's spilling over to soybean oil, and meal's doing better today after the big down day that it had yesterday. So soybeans hanging out all right, but again, running into this series of highs that we've got between 14.80 and 15, which has been where we failed 8 or 9 times before in the last few months. So you wonder, is this the time where soybeans can follow through to the upside, or is this once again the test of the high end of the range that ultimately will fail?
Yeah, I've been thinking the same thing, and if we get above 15, that'll drag some other stuff with it. And today with the dollar maybe get a little bit cheaper too, that could help. That's usually your last go-to when you're looking for an excuse why something happened to. But it'll be interesting after the CPI number. I think it changes things a little bit, and it's probably going to be good for our products. So,
Scott, it's interesting that you get a CPI number that's showing inflation coming down, and then to follow that up, you have commodity prices going higher.
Right, there you go. Right, after they've come off, which is probably the reason why the CPI came down. Anyway, let's stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried from Zaner Ag Hedge in Chicago after this. All right, welcome back to Market Day Report. Let's see about what's happening in some of the other things that we trade on this show. Let's take a look at livestock. Let's take live cattle. Be a good one to start with. It's kind of all over the place. We call that a smorgasbord. At least I call it a smorgasbord. A little something for everybody, right? How about Feb up 15 cents, 156.25. April is sharply unchanged at 159.90, and we've got June down a nickel, 156.15. How about the feeders? Feeder cattle, let's see, Jan's up 57 cents, 184.22. You can tell it's quiet, though. March is up 52 cents to 185.75, and then finally you've got, what do we have here? Lean hogs. And that's going to be up 85 cents to 84.55. April rep it's up 62 to 91.27. Let's bring back in Ted Seifried from Zaner Ag Hedge. I wish I had volumes on this screen. We don't, but I'm going to guess they haven't been too stellar.
Well, I can tell you the Feb cattle have traded a little over 18,000 contracts today, which is not very stellar. And I'm going to tell you Feb lean hogs have traded a little over 15,000 contracts today, which again,
wow,
not very stellar.
Wow.
We are creeping into the holiday trade in the livestock, it seems. And for the live cattle, we've had two very impressive days in a row, Friday and then on Monday. But then here today, we're not able to really follow through the upside. And we're right back into this major level of resistance, which we failed at 3 times. Now, a lot of people will say triple tops aren't a thing. You keep on knocking on a door, eventually it's going to open. Maybe that is the case. However, I have concerns about the cash market for cattle because packers' margins are leaning into the red now. And also, we might be getting past the time frame where packers really need to stock up in order to satisfy the holiday demand time frame. We're getting into that very, very quickly here. And as far as hogs are concerned, wow, the last 6 or 7 sessions have just been precipitous downfall in the hogs. And today we are trying to find some footing and come back fairly sharply, which had been working well until about the last 30 minutes. And yes, we are still higher on the day, but we are well off of our highs. And that is not exactly a huge vote of confidence. I'm hoping that the hogs can settle into a sideways range here for a little bit. But I don't love what we're seeing today, and I'm a little worried about the close here in a few minutes.
Great stuff. I agree with you. All right. I really appreciate it. Thanks very much for coming on, Ted Seifried from Zaner Ag Hedge in Chicago. I'm going to bring it back here to Nashville so I can throw it back over to Suzanne just one more time.